remind you of the Pavlovian nature of the markets and how affixed they are to trade either on the upside or downside, overreacting with every bit of good news, sometimes overreacting with every bit of bad news here. Lifting tariffs is one thing, talking about them is quite another, scoring a deal quite another from that. We're just keeping pace of this. We don't care whether you're on the right or left on this. As we say, we're not red or blue here. We're just following the green. And the market is proving once again that this issue, trade, dictates the course of stocks, certainly in the very, very near term. Let's go to Susan Lee. We got Real Clear Markets Editor John Tamny and Agora Financial Market Strategist Alan Nuckman. Susan Lee, I'm wondering if we're getting caught in that, we're going to have a deal, and pouncing on it. Just as when we get bad news in the White House or their tough words, we sell like crazy on it. But it is proof, I guess, that not impeachment, not anything else, not even the USMCA thing, this is the one issue that dominates trading, isn't it?
Yeah, well, it's the largest trading relationship in the world, especially on a one-on-one basis. Now, all week long, we've been hearing that China needed a little bit more than just the delay of December 15th tariffs. So that's because Chinese President Xi, has to sell this deal, yes, to the people of China, but also to a group of standing members of the Politburo, which is a 10-member group, including President Xi, that rules China, that this is a good deal for China as well. We got something out of this, and this is after President Trump signed that Hong Kong Human Rights and Democracy Act, which some people saw as a slap in the face to the Chinese leadership. So they needed a little bit more than just the delay of December 15th tariffs. And for their part, I would say China has also been stepping up to buy soybeans, up 13 times from September to November, up 50% in terms of purchases in November alone. So this might not be a generational trade deal. That might take a second term, but this is at least better for the markets, and at least it's not going in the wrong direction.
Alan, you can help me with this. Whatever your views of the president, do you feel that we change and change direction a bit too easily based on the sketchiest of details? This is the same president who before today talking that we could be on the verge of a big deal, who said he could wait until after the election if need be. So do we pounce a bit prematurely?
Yeah, that's why this is more of a game of psychology than anything else when it comes to investing. So let's step back a bit here. Let's remember where we were last December. That was a December to remember. We had the same news, but the market sold off. This year, we're having that ebb and flow, whether it's on again, off again, and the markets are up at the top. So no surprise, new all-time highs. The trend track is on target. It's going forward. It's 10 years of essentially straight up in the stock market. And the other positives that we can see is, looking at my board above me, there's a 20% chance there's going to be a rate cut in March. So there's a lot of positives out there, but I think sometimes we do overreact. You've got to focus on the price and see where we stand after a couple of days. But let's remember, the Dow's up 20%, S&P's up 25%, and the Nasdaq's up more than 30% in the last year of trade.
John Tamny, all of this happened, of course, on the same day we have the House Judiciary Committee marking up the final articles, the two articles of impeachment. Coincidence?
I think in a sense, I think because they're doing that, it ensures even more in the way of divide in Washington. When Washington's divided, politicians can't get together to do anything unfortunate for the economy, so that certainly helps investors. I think also this is an acknowledgement, in my perfect world, presidents and countries would have nothing to do with the private act of trade. But this is an acknowledgement from both sides that they see how damaging tariffs would be. They keep pushing back what they know what would be damaging, and that's got to be comforting to markets that ultimately, when all this is said and done, there are pragmatic minds on both sides who realize we must move away from the tariffs that would needlessly set back what is a great trading relationship.
Susan, when you talk to traders themselves and their mood right now, obviously this has been a boffo year. Unless everything just falls out of bed in the next couple of weeks, it's going to be one for the record book. But I'm wondering if it has just been contingent on things that are more on hope. I mean, some of the other stuff that particularly both of our other guests were getting into, the fundamentals, the earnings, the better than expected economic news, the busy consumer, the robust holiday shopping season, those enough are reasons for stocks to continue marching forward, not just, hedging bets on whether we're going to get a deal or not. What do you think?
I think there are a lot of realities to push markets higher. I mean, the Fed still says that we're not going to hike interest rates. At least expect expecting one next year, but not many people believe they'll actually pull the trigger, and they might not do that for the year after as well. And election years are very good for stock markets. On average, it's up around 12% for the S&P, with 90% hit rate that it'll actually go up during that year. And as people say, yes, CEOs might be pessimistic, but consumers are confident. And one of those two parties are usually right, and it's usually the consumers that power 2/3 of the U.S. economy. So I think there's a lot of positives to hang your hat on.
Alan, there is the other issue that with all the concentration on impeachment, not that necessarily goes much further than a trial in the Senate that's short-lived, and unless something really huge were to happen, the president staves off impeachment. But it does delay possible other matters that have to be addressed, including a potential government shutdown. At what point does Wall Street get worried about the damage, the collateral damage that could come of these distractions?
Well, Wall Street is always worried. That's what we get paid to do, is to look to the future and see what the potential concerns are going to be. But looking at that wall of worry, we can see the VIX right now is about 15. So it has rallied in the last couple of weeks. We had a little bump up here when we had that sell-off at the beginning of last week. But what's most important is the way that the stock market came storming back. Not only stocks, but crude oil and interest rates have also moved higher. So those are all very positive signs and signs of stability. So I think there are many, many more positives out there. Again, that's why we wake up in the middle of the night. We have to be worried about something. But right now, the market and the target from the drop from the top that we saw last October to December, that puts the S&P target at 3,500 on a full V recovery. We still haven't gotten there, so that's still 10% higher for those optimists like me.
John, you were touching on it, this idea that it was hard to repeat this year, but we have had repeats of BOFO years in the past. What are you looking at early 2020?
Well, for one, again, I think this division, when Washington's divided, when they're distracted by things like impeachment, they can't create laws, which really is, if you look historically, that's been correlative with good stock markets. What I'm not looking for is the Fed. I think that's just some sort of mirage that people chase. If central banks could decree good markets, then Japan would have the most valuable stock market in the world, and Europe wouldn't be too far behind it. We have great markets here ultimately because we've got the best companies in the world. If you look at what so much drove this rally, at least in the past year, it was Apple, Microsoft, Google, Facebook, Amazon. These are brilliant companies. This is not the Fed. Let's not insult our economy by presuming that those guys could drive prosperity. This is good companies doing it on their own.
All right. I want to thank all of you. A very good read on things.